Hey there, and welcome back to Coffee with Kim. I was going to introduce you to my friend. This is Ryan Sanford with Lamar National Bank. I wanted him to come today so that we could talk about some different options as far as lending. Welcome.
Thanks for having me.
Thanks for being here. So, the first thing I wanted to ask you is what you're seeing as far as interest rates and things like that in the current market and things that buyers are having to deal with right now.
We just had a rate cut a month ago.
Yes.
And I believe they meet next week again, the Fed, to discuss another rate cut.
Okay.
As far as what that looks like, we kind of don't know. Nearly positive it's going to be a cut. Could be 25 basis points, 50 basis points. But what that means for buyers is that there's an opportunity to save a little money on your monthly payments coming up.
Right.
Get a little extra buying power, be able to spend a little more. Hopefully those cuts keep coming throughout the next 12 or 18 months, really get people back into the market and buying demand really kicks back in.
Yes, that'll be super exciting. Okay, so then you have some exciting product or as things that buyers can do to help them have more buying power as they go into this market and being able to negotiate.
So one of our most exciting products is an owner finance product. What that allows is for a buyer to purchase a property without having to go through a traditional mortgage company or a bank. It is the seller providing financing, and so you can get some creative terms. You can get some interest-only periods, whereas a traditional mortgage usually you don't hear interest-only. You can also get some lower interest rates depending on what the seller is looking for. Also lower down payments. So if most banks require 20% or so on a purchase, a seller might be able to take 5-10%. The product I have, it allows these sellers to provide that financing to buyers without having to worry about finding an attorney or worry about servicing the loan in general. I handle all of that entire process.
Okay, tell me what that means. You handle all that. So what would it look like before and after closing? What things would you do on that?
Yeah. So if the owner says, here's the terms I want to offer, we go with that. I can document anything. You say, hey, I want to offer this 30-year loan to this person to buy this house at 8%, 7%, 6%, whatever it is. And here's the fees I want to charge them. What we do is we take that, we document it, we charge a small fee that gets passed on to the buyer, so no cost to the seller at all. And then we charge a small interest rate scrape. So if you say, I want my return to be 7%, we would charge just a little bit more than that to the buyer, and that's the cost for providing loan statements and the ongoing monitoring service. And so once you give me that information, I know who the buyer is, I document it, we close, the funding happens, the realtors get paid, and then at the end of the day, it's closed. And ongoing, I collect the payments, and it works like mailbox money.